Paul Scurrah, congratulations on your new job. You've got a big task ahead, starting with 750 job losses.
Yeah, it's been a pretty sombre day at the Virgin Australia Group today. I think the results announcement has shown the need for us to become more resilient, particularly in the way we manage cost. The positives in our result were positive revenue growth. We've got a growing revenue base, a very loyal customer base and growing, but we're still not using the revenue growth, or we're not converting it into earnings growth. So I think we need to get the balance right across what we offer the customer and what our shareholders expect of us.
Well, you use this word right sizing in terms of these jobs, and you're going to save about 750 million. That's almost the value of your underlying loss right now. So how much of this cost out is it all coming out now, or will there be more to come?
The figure's 75 million, Tikki. So this is definitely the first and most obvious step coming out of our strategic review. The focus is making sure that we become a sustainably profitable business, and that we get into that space even when the headwinds are against us, which they have been for the last 2 years. There's been 2 years of headwinds coming at us, accumulating hundreds of millions of dollars in extra fuel and foreign exchange cost. So our focus is making sure even in those times we can get to be a profitable business.
So obviously both airlines, major airlines in Australia, have faced this problem with the dollar and with fuel. Qantas, which I reckon is about 4 times your size, had a $2 billion cost out program that they went through. Your cost out program doesn't seem anything like that. So I just wonder whether this is just the beginning and there's more to come.
Well, we'll look to make sure that we hit what would be global benchmarks around our cost per kilometre, the overhead ratio costs that we have compared to our operational cost. So there is a journey to get to the cost level that we want to get to. Some of that won't just be about labour coming out or corporate and head office jobs, as we've announced today. It will be about more prudent capacity management, making sure that our fleet utilisation, our aircraft utilisation...
Yes, that's a big lever, isn't it, really?
Absolutely. I think one of the levers we do have in this industry that we can control is capacity management. We're seeing some subdued conditions. We saw the market drop off quite rapidly around the time of Easter and Anzac Day and the federal election. That softness is continuing. We are seeing some hope, but we're planning for a subdued market, and we need to manage our capacity in accordance with that.
You've been in the seat since March. What have you done so far?
Well, I think in the first week we were confronted with the issue with the Boeing MAX accidents and the order that we had with Boeing. So we initially were required through the contract to take our first order in November of this year, so there was a fairly intensive negotiation with Boeing to push back that order till July 2021. So not only was that the right thing to do from a safety and operational perspective, but it was also something that pushed capital demand on our balance sheet down the path for a couple of years. We've done that. We put out the profit downgrade in these soft market conditions. Today we've announced a very significant organisational restructure that has most accountability at a group level for all of the brands that we've got.
Yes.
That will also remove duplication across those brands. It will see a flattening out of our structure and a leverage of the investment we've got in systems that can now be used across the group.
So very interested in this new restructure. Your co-pilot, if you will, your CFO, was at Virgin Blue in the old days with Brett Godfrey when they made money, as opposed to sort of the last 10 years when John Borghetti branched out into not just the low-cost carrier, but some would say a Qantas light model, right? Trying to be all things to everybody. Yeah. You're not really changing that strategy, and the only money was made in one of those years in 10.
Yeah, so I don't want to be categorising the future as being a high-cost or low-cost carrier or a high-service or low-cost carrier. We will be segmenting the market and creating suitable products to address those markets, but make sure we do it in a sustainable and profitable way. So we don't intend to be a follower in the market, but we do intend to provide a product that's very attractive, both from a customer service but importantly a value point of view to the corporate part of the market, yes, but also being the best value airline for the leisure market.
But isn't that exactly what your predecessor was trying to do as well. Is there really a change of strategy here?
Well, there's definitely a change of strategy around the balance of the products that are offered. We're still working on the final look of that strategy, but you're going to see us be a lot more selective about what products we offer to what market segments. But we will continue to have a very strong and competitive offer at the corporate level. We have no intention of taking away some of the great things that are known and loved by our corporate customers.
Yeah, business corporate, you're talking about best value again. What do you mean by that?
Oh, we are very frequently and well known to be a lower cost point of our business fares than our competitor. So we often, where companies have a best fare of the day policy, we often get greater share because of that policy. And
so you're still going to fight very hard for that quite lucrative sector?
Yeah, we intend to compete very strongly in that sector. We also intend to increase our focus on the leisure market.
Internationally, you've looked at new routes as well. Of course, you ended with Air New Zealand, but you've looked at new routes across the Tasman, new routes into Hong Kong. How do you see those routes, and will they change, particularly Hong Kong with what's going on up there?
Yeah, so our international offering is very important to our corporate customers, and we provide that through a combination of flying to destinations in our own right and through some really powerful partners who are great airlines into all parts of the world. So I envisage a future where that combination is something that we continue with. Whether or not we go to any further routes or not, it's early days for Hong Kong, and we want to see that work before we make any decisions to go anywhere else. Until recent times, though, Tiki, we were seeing growth and improvement in the Hong Kong market, but recent events that are very well known about Hong Kong have seen a bit of a drain on that market, so we're watching it really closely.
And generally you see quite a soft outlook for the near term, don't you?
We see a soft outlook, a flat outlook. There is some things happening now that do give us a little bit of hope. We think that the tax cuts and the interest rate reductions will start having a positive impact on the economy, but we're planning for a flat outlook, and hopefully we get something better than that.
A real driver, as with your competition over at Qantas, for the company has been Velocity, your frequent flyer program. Now, 35% of that could be up for sale. Are you likely to sell off Velocity?
So through our announcement, you would have seen that it is a good performing part of our business. It is a very important part of our present, and it will be a very important part of our future. So we intend to maintain our ownership in Velocity. We intend to maintain a controlling and majority stake, and we're working with our equity partner Affinity on exit options as we speak to make sure that the outcome of that is positive for all parties.
Danielle Carey is moving into customer service in addition to her other existing roles. Now, at Virgin Australia, the customer offering and indeed staff morale have been very, very important and very front of house. How are you going to keep that there with these cuts and having to batten down the hatches?
Yeah, so it's important to us to ensure that people see us as a customer-centric organisation, and by putting this new role into the executive leadership team, it ensures that there's a strong voice and an advocate for the customer around every discussion we have, be it with the commercial officer or the chief operations officer or indeed the chief financial officer. So Danielle will be a very strong advocate for what we are doing well today, what we need to improve on, what new products we need to bring to the market. What we've been able to do through some of the work we've done around project prioritisation is pull back on projects that don't have any major impact on the customer and reinvest some of that in customer facing, particularly in the digital and personalisation.
So in terms of these job losses, are there going to be cuts at the customer facing level?
The intention is not to do anything that's going to impact our ability to serve. In fact, one of the really positive, surprising things for me when I got the job, and having been a Virgin customer, I saw this from the outside anyway, is just how positive and vibrant and happy our frontline staff are. Consistently happy and providing wonderful service. As I get around the network, I get a lot of support from the front line about making tough decisions around shoring up our financial future, and I know there is a lot of support for the announcements we've got today, albeit it's tough on their colleagues as well.
Really interesting. Your restructure involves you individually being very hands-on. You're talking about returning to profitability. How should the 9% of free-float investors look at this in terms of when they should judge that should be? When will you get back into the black, and how should investors judge you?
Yeah, so it's hard to predict exactly when because of the unknown variables in the market. What we can focus on is levers like capacity, but also unit efficiency, aircraft utilisation, and those things that in most circumstances will get us to profitability pretty quickly.
So within 3 years, maybe?
Hopefully sooner than that, but pretty hard to predict given the volatility in some of the headwinds that we're faced with.
Yeah, the Aussie dollar as well, the Aussie dollar, US dollar. Now you've got quite a lot of US debt, but you're working on that too.
Yes. So in recent times we're able to improve our ratings through the credit agency focus on us, and we see that that's given us the ability to focus more on replacing US dollar debt with Aussie dollar debt. We did a $250 million raising in February this year in Australian dollars, and our intention later this year is to go through some refinancing that will be focused on increasing the amount of exposure to the Australian dollar.
Finally, Paul, your predecessor, John Borghetti, I think there's no secret, had to deal with all these huge shareholders that you have, some of which are considered sellers in strife of their own, like HNA and perhaps Etihad. How are you going to deal with all these shareholders, and wouldn't you be pushing to take the company private?
So on the dealing with the shareholders, I've been pleasantly surprised with how united our board is with the shareholder representatives and the independents. They're all 100% behind the direction I'm taking the company in, and as one want us to be the best possible business we can be. We have the luxury of having some of our shareholders and board members being also operational partners that plug a really good important network gap for us, and the united nature of our board is very, very pleasant to see. In terms of whether it goes private or not, I mean, that is a question that must be asked of the shareholders. I was recruited to run an ASX listed company, albeit with a small free float, and that's the job I'm doing and I'll get on doing.
Paul Scurrah, we will watch with interest. Big job ahead. Thank you so much for joining us.
Thanks, Dickie. Thanks for having me.